All right, welcome back, everyone. Before we get started, unofficial poll. We're going to be talking about Lou Pearlman on Thursday. Has anybody watched the video or looked at it yet? So Lou Pearlman was very famous for the early or late 90s, early 2000 boy band craze. So we have him to thank for that. Depending on how you feel about it, you can be like yes or no. But I thought I'd do a Professor Templeton thing and like start out the class just by listening to some of the songs on YouTube. Any requests like some boy band music you want to listen to? I'm definitely going to do Bye 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 from NSYNC. So like a little bit of Backstreet Boys and I want it that way. Okay. All right. That's a good one too. All right. All right. All right. So if you have any requests, just send them my way. I'll make a playlist so we can actually have something. I would make a really long playlist and play it in the background while we're doing the discussion. I just don't think anybody pay attention to me, but like I'm just vibing to the good tunes, Dr. Barnes. You know, so today we're going to be talking about the second section of financial transactions and fraud schemes. This was an assignment that you could do without the ACCT fraud examiner's manual because there's plenty of web searches to find detail. If you had the fraud examiner's manual, it was much easier. So just one of those things that to note. That'll be a kind of consistent theme throughout is that some of the stuff, there's nothing that's required for the fraud examiner's manual to have, or required to have the fraud examiner's manual for, but some of it will be much easier to find. This is one of those ones that there was just so little way to aggregate this information together that I said, well, if they don't have it, then they're going to be doing some web searches. But fortunately, we live in the day and age of AI, so web searches are actually really easy. Let's go ahead and start off and talk a little bit about some of the concepts in this area. And I've got the sections of the fraud examiner's manual all lined up in case we have any issues or disparities between our information. But I wanted you to answer the individual questions about some of these concepts to actually define and frame some of these things. And this will be true next week as well. We'll do a very similar process. So the first thing I wanted to note is what is corporate espionage? Have you heard the term corporate espionage before? It's like one of those things that you see in those TV shows. It's like, it's kind of you're a spy, but you're a spy for business. And you actually steal secrets from the evil corporations so that you can use them for the good corporations. That's obviously what it is. What is corporate espionage? We'll start off with Troy. What does your group say on that one?
That is when a company illegally steals confidential information from another company to gain a competitive advantage. Typically involve hacking, bribing, or stealing trade secrets.
Good. Yeah. So just illegal covert means to acquire information. And again, this is generally going to be for commercial purposes. So there's going to be some sort of monetary benefit out of doing so. Now let's contrast that to competitive intelligence. Now, competitive intelligence sounds a lot more innocuous, is it? It's still a really, really important, prominent thing, but there's a big difference between that and corporate espionage. Jared, what'd your group find on that one?
We said that competitive intelligence is when a company uses publicly available information to obtain information about competitors or industry.
Okay. So just we're talking about kind of the same idea, gathering information, but it's through legal, not illicit means. All right. So making sure that we have data that are assembled in relevant, accurate, and usable knowledge about competitors. Do we think that's a really important thing to have for most organizations, particularly large corporations, to be able to understand what their competition is doing? Yes. Might they resort to corporate espionage if they think that they need a much larger advantage? I would say that corporate espionage is probably one of those things that exists. We don't like to talk about it. We don't like to admit it. We want to think it's one of those things that's only on TV or movies, but probably exists to some degree in one way or another. Probably not the form we see. It's probably not some attractive James Bond looking fellow who walks into an organization and says, "Okay, I'm here to work for you," and then steals all the information on some sort of piece of technology device that he can handle or he can hide in his shoe. But it's probably something parallel to that, okay? Parallel to that. I don't know what would be parallel to James Bond. I'm not quite sure, but it's a note. So we're going to come back to that. Actually, yeah. So we're going to talk a little bit about that in kind of context to how we prevent things like that. So moving on to identity theft schemes. So what are some examples of identity theft schemes, and which one do you think is the most frequent in occurrence? Andrew, I gave you a pretty rough one here. So can you step up the game here?
Yeah, so we said that some of the examples, financial identity theft, medical identity theft, and tax identity theft.
Yes.
And we agreed that financial identity theft is the most common because it leads to the quickest access to large volumes of cash
Excellent. Well done. Your group did well on that one. So it's not necessary. So the ACFE actually has a little bit more of an extensive list, but I think those three that Andrew identified are three of the most prominent ones and the ones that we are going to be very focused on for this particular course. We're actually going to talk a little bit about healthcare fraud next week. But financial, definitely the most common and frequent. Criminal, medical, insurance, tax, employment, and business. They're all fairly intuitive when you think about it. Criminal's a little bit misleading. It's like criminal theft. It's like, oh yes, I want to be accused of committing crimes. Yes, that's my goal. I'm trying to build street cred. And I want to actually know it's the other way around. It's when you're a criminal, but you want to avoid the scrutiny of being a criminal. So that's kind of the idea for identity up there. All right, financial institution fraud and payment fraud. So what are those? Tyler M., what is financial institution fraud?
Us. Main targets are institutions like banks and credit unions. There's schemes like mortgage or commercial loan fraud.
Right. So it's basically a fraud scheme that occurs against a financial institution. All right. So against a bank, savings loan, credit union, and other governmentally assured repository. And Tyler gave a good example, like a mortgage fraud would be a good example of that type of scheme. EL, what is payment fraud?
You say that.
Right. So schemes that exploit individuals for paying to goods and services they do not receive would be a good example of that. But yeah, doesn't necessarily involve a financial institution, just any kind of payment for goods or services rendered. All right. And then we talked about number 4, where we actually ranked the following information and ranked them on list. I want to save that until we get to the actual list because you had to do some comparative analysis, and I'm more concerned about what came up and what was surprising to you in your group when you compared your list that you personally put together and what with the list that you came up with when you looked at the information. By the way, how much disparity between the groups, like when you shared your answers amongst the group members, how much disparity was there in that list? Were you all fairly consistent, or was there a wide array of disparity? It depends, yeah. So that's where we're always at, yeah. So I guess it depends. Did anybody just have like an argument? It's like this is the most important, and the other ones, and somebody else is like this is the least important. Okay, well, I'm glad you guys can come to a consensus. Yeah, working together to really bodes well for business and economic students, and yeah. So, all right, moving on. Question number 5. So we're going to talk about one of my favorite things in the world. I've been telling my auditing students because I think I've said it at least 3 or 4 times in the class so far. This is my favorite thing to talk about in the course. But you all know how I feel about controls. So controls, really, really important. One of the so we're just talking specifically about preventative controls, but just for context, or preventive. No, I think I said preventative controls. First of all, what's the difference between preventive controls and preventative controls? There is no difference. The same word, okay? Just the exact same word. It just depends on how I'm feeling in the day, which one I'm going to use. But what is the other category of controls that we've talked about in other courses that we need to be aware of? Detective and corrective controls. Yes, very good. Now, this one's going to be the most important one for our particular frame because preventive controls, they're trying to prevent bad things from happening. Can we all agree that preventing fraud is a good idea? Yeah. I'm waiting to see somebody shake their head out there. Okay. Look at you, Ben. All right. So anyway, so preventive controls, I shouldn't have said that. I'm laughing now. So preventive control to prevent the various types of data theft and intellectual property. So what are some examples of some controls in this area? So there's actually kind of a wide array, but I kind of want to talk about 2 basic categories. I'm going to start off with asking what the group came up with. So Alex, what did your group say on this one?
We said that some of them include having clear security policies and procedures, training employees to have better security awareness, data encryption, and enforcing multi-factor authentication across the company.
That was a good list, good list. So interestingly, those kind of all fall into one category with one exception, okay? Those kind of fall into the category of good organizational controls. Now, I don't want to rehash because basically I've been bludgeoning you over the head for like 3 years with the importance of controls. And can we all agree that controls are important? Don't you dare say it depends. All right. So yeah, controls are really, really important. But one thing Alex said, talked about is about employee training and accountability. Now, what does that represent? Is that something that an organization can enforce? They can enforce training, but they can enforce accountability. I guess suppose to a lesser degree, you can say, if you're not doing your job, I'm going to replace you and find somebody who will do your job. But at the point and instance where a control becomes important, can you enforce accountability at that point in time on an individual transaction? So can we argue to some degree that in addition to organizational controls, which is the structure of controls, there also needs to be personal responsibility for controls? Let's just frame this to something we talked about in auditing. And again, I know this is not an auditing course and I respect that, but I also want to talk about something I'm familiar with and that you've heard from me talking about before. When we talk about control failures, there's two categories: deficiency in design and deficiency in operation. All right. So the deficiency in design is basically the organization creating the controls to say that these controls need to be in place for proper operation within the organization to prevent bad things from happening, particularly fraud. But what about deficiency in operation? The controls are already in place, but they're not functioning properly. What is the easiest way for a control to fail? For people to ignore it. All right, for people to ignore it. I say on the quizzes, don't look at your notes, don't look at items. You are forbidden from looking at outside resources. What's a control failure there? Somebody looks at the outside resource, all right? Which is why I do kind of walk around during the quizzes and check and make sure everything. Not that I don't trust you, but I'm just going to keep you on your toes, all right? Keep you on your toes. So a control failure is when people who are responsible for the controls don't enforce those controls or don't follow the controls. So there's two elements there that we do need to be aware of. Now, we can actually promote the organizational controls through good training. And what else is good? What else is important with a good training? What is our first component of the COSO framework? Control environment. Well, control environment represents the tone at the top. Okay, the tone at the top. What the organization says and their attitude towards control. So if the organization has a good attitude towards the controls, then everything will go well. If they have a bad attitude, then it doesn't really matter if controls exist or not. They're going to be ignored. So there's going to be an important note to say that that's going to be our most important aspect when we talk about personal accountability. Because if people are at the top are taking these things seriously, then the people down at the bottom are going to take that more seriously as well. So personal accountability is going to be facilitated by this idea of being at the tone of the top. Now, ultimately speaking, okay, you had to choose one or the other category to be most important: personal responsibility or organizational structure, organizational infrastructure. Which one is likely to be the most effective? I think personal responsibility, you can make an argument, is going to be the most effective, because you do need to have people that are going to be responsible. Can we really enforce personal responsibility, though? So many organizations are going to rely on good controls infrastructure. And there are some particular specific ones with respect to fraud that we can identify. The Fraud Examiner's Manual actually identifies electronic counter surveillance as a potential remedy. Now, how practical is that for many organizations? For really large organizations, it's going to be something that I think you can naturally implement. Monitor the activities of people operating. By the way, don't go to external websites or be on external chat bots when you're going off to your job in the real world. Okay, especially if you're going to an accounting firm. Do they monitor that? Yes. How do I know? Not saying. All right. So yeah, be very, very careful about that, because they do monitor that. But is that something that's practical for small mom and pop operations? Probably no. It's going to be one of those things that's costly and overburdened. So we can find solutions that can be useful, but they're not necessarily practical in all circumstances. All right, moving on to respect with identity theft. Which groups are at the highest risk? Now, this is a broad speculation, but there's going to be some that I really want to talk about. So, going back to you, Troy, what groups did what groups did your group identify?
So we had kind of a two-part answer. I said young adults aged 20 to 39 are the highest risk because they have the largest digital footprint and most active financial lives. And we said high income earners and older individuals are most common targeted if they can access to more financial resources.
That's a good delineation, and I think that's probably an important one to note. So I would say that your generation, your age gap, probably has far, far more knowledge than older individuals, as far as their understanding of that. But let's be honest, okay? And you can be pragmatic. I want to talk about your generation as a whole, okay? Who's likely to take things more seriously in the long run? My generation or your generation? Yeah, my generation, because I've seen it all. I've seen a whole lot of things. I've made a lot of mistakes. I said, I don't want to make that mistake again. Yeah, if you've never made a mistake, then you're never going to know the consequences of that. It doesn't matter if Dr. Barnes is ranting and raving over here and said, don't do that. It's like, well, I'm going to do that and see what happens. Ow, I should not have put my finger on the stove. Yeah, bad idea. So even though you have the knowledge, you don't necessarily have the experience in that area. And that's one reason why they identify college age individuals as being a very, very high risk target area, because you're very, very intelligent, but there's the application of whether or not you've actually experienced that. Does everybody remember back in the professional judgment framework discussion, I said there's a difference between knowledge and common sense, or intelligence and common sense? So intelligence is your book smarts. Okay. A lot of people are studying for Becker or studying for the CPA exam and doing Becker right now. Got a lot of book smarts, but the application of that is what's really important. The application of that information, which is a much bigger challenge. So that's kind of an application of that. Now, as we get older, we begin to lose our faculties. I know because I get older every day and I lose more and more faculties every day. So yeah. I'm talking about cognitive faculties, not faculty members on the, you understand? Hopefully I got that across. So that's something when we talk about older individuals being a target. And this is something that's very pronounced. We're going to talk about elder fraud next week. This is something that I try not to joke about. I know that I joke a lot in this class, but I try not to joke about because my father was a big victim of this. He was suffering from dementia before he passed away, and he would get hit with emails and with phone scams and answer the phone. He would just go into panic. And I think that not only is it something that's just that's unfair to actually target individuals who are not in their right mind, but it's just cruel because he actually had paranoia and got panicked, and he kind of lived a really, really neurotic elder part of his life at the end of his life, simply because he would receive a call like saying the IRS is about to come and arrest him. We can all joke about that and say that's ridiculous. The IRS doesn't arrest people, all right? But he didn't know any better because he was kind of not in his right mind at the time. So if it seems like I'm kind of taking that road, this is one of those things that really, really pisses me off. Okay, I apologize for the language, but that's simply true. It's simply true that it really does. It infuriates me. There's one thing in this world if I wish I get rid of, it's abuse of the elderly, because I've experienced that firsthand, and it's terrible. So just a primary warning, if it sounds like I'm in a bad mood now, just wait until we talk about elder fraud next week. I'm probably going to be dropping some bombs. Okay. I'm going to be, well, kind of. I'm not going to do something where I split, but I'm going to be very, very unhappy about it. Okay. All right. Going to something that's a little bit lighter. What's a wire transfer? Jared, what's a wire transfer?
An electronic transfer of funds from a worldwide financial institution into a beneficiary account at any banking point that the customer might choose.
Yes. Okay. So wire transfer is basically a way to send money electronically from one point to another. Oftentimes we talk about them as bank accounts, but can wire transfers occur outside of bank accounts now? Yeah, we live in a wonderful day and age of crypto assets where we can actually transfer stuff like that as well. So traditionally, wire frauds, they were a means of facilitating financial institution fraud. Okay, so that was one of those things that we note. But is it more likely nowadays that you utilize wire transfers as a part of the fraud for financial institution fraud, or more likely payment fraud? And Jared, that was such a great answer. I'm going to stick with you.
We said payment fraud.
Payment fraud. Why is that the case? I alluded to it just a second ago.
We said that they often use wire transfers to move money into accounts and use for fraudulent transactions.
Yes, very good, very good. So we know that there's going to be a process. Well, we should actually do this. I call it a frictionless process. Now, what does a frictionless process means? It means that there's very little impediment to being able to do something like that. You don't have to go through a lot of steps to do it. You can do it very easily. Now, I do want to move on to question 8 because this is related to that. And this is going to kind of help explain or provide context for that. So wire transfers have been around for 80 years. Andrew, do you agree with that statement?
Yeah.
Okay, good. All right. With regards to a changing society, how do you think the risk of wire fraud has changed over the years? Now, okay, what's your group's answer on this one?
It kind of comes down to development with technology or developments in technology, in particular AI. A lot of schemes, fraud schemes are using AI voice generation to trick victims into thinking they're speaking to a relative or a close friend.
Yeah, technology sucks sometimes. Yeah. We think about the upside of technology, and you guys know I'm a very big advocate for AI. I think AI will eventually make people's lives easier, but AI schemes are going to proliferate and they're going to make things more and more challenging. We're going to talk about a particular AI scheme. I'm going to go on to the elder fraud rant again. We're going to talk about a particular AI scheme, which is AI impersonation next week. And AI impersonation infuriates me. All right. So we're not going to get in that now because I really don't want to drop the bombs right now. So yeah, I couldn't resist. Everybody was giggling when I said that. It's like, I can't imagine Dr. Barnes saying something bad. It's like, no, I've done it once or twice today. Yeah. So talking about technology has enabled wire transfers to occur. Maybe not in the same form as before, but wire transfers have existed for a very long time. When I say a frictionless process, how much challenge was there 80 years ago to send a wire transfer? You had to actually go to a place that had wire transfer set up, whether that was a bank or something like Western Union, that was kind of the early adopter of that. But it could only go from one point to another certain point, a very specified sequence. So if you wanted to send money to one point, you had to actually have a bank that was willing to do it and a bank that was willing to take the wire transfer, and the two parties had to be present at that. Nowadays, does it require that? No. If somebody wanted to Venmo to somebody else, could they do that? Hopefully you can. I can Venmo, and I got like 30 years on pretty much everybody in this room. So yeah, it's a very, very frictionless process, very, very easy to transfer that. Also, what can we say about the transparency of electronic exchanges nowadays? So electronic transparency of 80 years ago was pretty obvious because you had to see who the party was, they had to sign for it, and you had to see who the other party was, and they had to sign for it. You knew what the two banks are. All right. With respect to cryptocurrency specifically, what's the transparency level on that? Other than the blockchain, almost non-existent. Okay. And you don't even have to be a regulated party on the blockchain anymore, especially if you've got a public blockchain that doesn't require permission. So the transparency is certainly problematic. So easy to do, transparency. We've talked about cybersecurity. One of the biggest means of cybersecurity ransoms being paid is through crypto assets, through cryptocurrencies, simply because it is a means for criminal activity, something we have to consider. Now, moving on to a question of the benchmarking report. According to the benchmarking report, what percentage of AICFE members said onboarding a new business vendor as a vendor customer is at least moderately challenging? Now, what do we mean by onboarding in this context? Onboarding means that we're going to start working with a new vendor or a new customer. So let's go ahead and take a look at this diagram. Let's take a look at this diagram. How challenging is at least moderately, and hopefully you at least saw the moderately was going to be 41%, so 52% for a customer, and 61% for 61% for a vendor. By the way, let's talk really quickly about the intuition behind this. Why is it more difficult to onboard a new customer than a new vendor? This is not a specific question because I didn't ask this question, but like, what would be the intuition behind this? So how frequently is a new customer going to have existing controls infrastructure in place? We're talking about it as an individual. I mean, how many of you all spend your days going home and says, okay, I'm going to work on my controls infrastructure tonight? I was expecting to see at least one hand. Wow, wow. It's so disappointing. Actually, no, most individuals do not have good controls infrastructure, at least not specified controls infrastructure, whereas organizations do. If you're a vendor, it's generally going to be part of your business model. So I would say that's probably one big argument for onboarding. So existing controls infrastructure at the site of the party that you're working with is going to help facilitate that. Even so, it's not a big difference. It's not a big difference. But what's interesting is we compare this second question saying, what is the results of the percentage who think onboarding programs are effective? So onboarding is basically the process of accepting a new customer or a new vendor. Now, this is a pretty easy question, Tyler, but I think I gave you a hard question earlier, so I think I feel okay with this one. Are the results significantly different on this?
The results for that were, they said 87% effective.
Yeah, 87% both customer and vendor. All right, now here's a more challenging question, okay? Here's a more challenging question. So I kind of bait and switched you because I said I was going to give you an easy question. Now I'm giving you a challenging question. Is there a correlation between these assessments?
Strong correlation because businesses are incentivized to create these thorough processes.
Right. So businesses themselves are going to have strong controls infrastructure to actually prevent problems. So even though they know that there may be challenges with the third party themselves, with the customer or with the vendor, the actual internal infrastructure is going to be defined. And if you've got a good awareness of this, then the actual process of onboarding should be pretty straightforward, should not be all that challenging. Now, let's think about this just from a skeptical point of view. Is anybody in this room skeptical? Hopefully everybody is at least somewhat skeptical, okay? I taught you to be skeptical, except against the thing I say. Everything I tell you is true, all right? But what about the skeptical point of view? Do we think that there may be some overinflation of information in this with these organizations reporting to the ACFE? You know, it's challenging for get good customers and get good vendors, but we've got good processes internally. How many people think that some of the organizations may have fudged those numbers a little bit? How many organizations want to admit, yeah, our processes, internal processes suck. We're not very good at onboarding. I would not want to admit that. Even if it was just an anonymous survey, I don't think I'd want to admit that. So how much of this do you think is just misrepresentation or possibly overconfidence in all processes? Some amount of it, not all of it. I think some amount of it is. I think that this number, if we were to be completely and totally honest, I think the disparity, which is like 35% for customers and 26% for vendors, I would say some percentage of that, probably a majority of the percentage of that is probably overconfidence or misrepresentation, but some of it is legitimate good business process in there. So it's important to keep in mind that organizations are very likely going to pass the buck when it comes to good processes. When they talk about the what their internal protocols are, they're always going to naturally assume that their internal protocols are better than the external parties. And so that's really, really important because if we have that overconfidence, what is that going to mean with our actual be able to prevent, to detect fraud on a timely basis? So if you were overconfident in your ability to prevent and detect fraud, are you going to be easier to fool or more difficult to fool? Easier to fool. Okay. So that overconfidence is one of the things. So my general policy is to walk in and say, I know nothing. I'm just going to assume that I'm wrong, and then I'm going to let the information tell me that I'm wrong. And it's worked well so far. We're working going on 54 years of being okay in that regard. So, all right, last question. Examine figure 10. So figure 10 is actually looking at the ratings here. So I'm just going to do a couple of these. So going back to question 4. Question 4 said, rank these in order from most important to least important. AL, what did your group say on your personal rankings for these?
Personal verification.
Okay. 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 All right. Not bad. Not bad. Okay. So that was what your group had a consensus with before they looked at their second piece of information. Okay, well, that was pretty impressive. That's pretty impressive. Let's do for comparative purposes. Alex, what did your group say as far as information?
We had 2 that were the exact same as that, and then 2 that switched the tax ID and ID verification.
Okay, so you said the tax ID is more important. Okay. Just out of curiosity, you do not have to raise your hand on this because I know that nobody's going to raise their hand. It's like, no, I didn't do that, Dr. Barnes. But did anybody look at bankruptcy history and think that's going to be a really, really high one? Are
You
you?
have the exact opposite order of
Excellent.
one, and everyone else in my group have it.
Okay, well, that's a humbling to admit. But again, you assume that we know nothing, we're never going to be embarrassed, you know. So it's like the case. No. I honestly looked at this, and my order was completely off when I first was looking at this question. And I was like, okay, how do I actually articulate this? And I said, I think if I was to internally articulate, I would have said bankruptcy history and criminal records would have been really important. But as we look at the answer, are they? Oops, I should probably click on the answer if we're going to look at this. Are they as important? Spoiler, they are not. Okay. So tax ID number and ID verification as the 2 groups identified are the 2 most important. And there's not a huge amount of difference, huge amount of gap. Tax ID as number is probably the most important. We're going to talk a little bit about that in a second. But criminal records and bankruptcy history, not as important. Now, why? Why did this come up this way? This makes no sense to me. At least it didn't until I started thinking about this. Why are these at the top and these near the bottom? What is probably the most important piece of detail that we need to verify as an organization if we're trying to onboard new entities? That they exist, okay, that they're legitimate individuals. Okay, so it doesn't really matter if we look at their criminal history and bankruptcy history. If they say, oh, there's no bankruptcy history, well, possibly there's no bankruptcy history because they're not real entities. So we want to make sure that we understand that these exist. And what's a good indicator? As much as I give crap to the IRS, tax ID number is a good indicator of existence, all right? Because the IRS is going to come after you if you don't pay your taxes. Now, just as a quick understanding, tax ID number and ID verification, they're both important. Why is tax ID number more important than the ID verification? Why is this not flip-flopped? Because I know that some of the groups probably looked at that and we're still not trying to determine which is the most important. But why do we assume tax ID number is most important? Is it possible to falsify this information right here? Yes, it's certainly possible. It's happened many, many times. Is it possible to falsify this? It is possible. Is it very easy to do? Is extremely difficult to falsify information at this level. So that's why we're trying to hold tax ID number as the highest and most prominent. If we can determine actual existence, and onboarding is much more formality, because once we determine existence of the entity, then we can do the follow-up checks of the criminal records and bankruptcy history. But this has to be held in check before we can actually determine these down here. Because if we don't know that these exist, it's irrelevant what this is down here. So that's more of a large picture issue, is that we have to establish the actual permanence of the industry, that or the entity, the actual existence of the entity, before we can follow up with any additional questions we might ask. Is that relevant to your case that you might be working on this week? Maybe. All right. It depends. All right. It depends. All right. We're done for today. We'll do some boy band stuff on Thursday. See y'all then.
Even a real person.